Welcome to TradeTheNBI.com. This is John. This report is for the 3rd of May, and well, we're already starting off with a nice little pump here in the pre-market. We had our crossover below here of the magenta on the NBI. We've been slowly seeing the shorts increase here. It's still cyan under red, been a buy. In fact, we're still there. So none of that's changed, and we're still working off of complete steel reset, at least coming from underneath, meaning there's plenty of buy power still capable of pumping into this. The real question is going to be when we get a change in the shakeout down here, and if it's going to be a lower high. But you could have successively lower highs and higher price before it finally breaks down. It just, when it does break down, it will be swift. That's usually the case because we've talked about this many times. The markets fall much faster than they rise, simply because there's not enough room at the exit for everyone to get through when they're all trying to get out, and that usually exacerbates things. But for now, still fairly decent. Doesn't mean that we can't get a rollover in any of these, particularly if the cyan jumps a little bit further on a fade. But ABM yellow right there at 41.62. Kind of flattened out at this particular point, which just means you're getting a little more sideways action, much like we had right here. It becomes simple below it, you have a much greater propensity for it to continue its decline, particularly if we get that transitional change. For now, not really happening, but again, this is that battle between where assets go. We're a couple of days away from new fund money coming in, so there's going to be an influx of cash, and it's unlikely it's going to go into bonds, given not a whole lot of yield there. So this again, the difficulty you get is these levels and valuations. People start to wonder how much more value can you get when it's already this elevated, and that becomes an interesting one when it comes to the exuberance. I think the Fed called it frothy markets. Well, but that's the nature of things, and the result of this situation is money's had nowhere to go for quite some time, and we've talked about this for years. So none of that's changed. From a gold aspect, again, the supply chain issues that we talked about before right around the time of the pandemic, over a year ago, we knew they would result in constraints and displacements, and some of that is going to lead to sharp inflation. I mean, you see it in plywood and some of these other commodities, and as that starts to filter through, and the fact that you've had so many millions on the sidelines getting paid to do nothing, it's going to be hard to incentivize people to come back into the workforce, and the only way that's going to happen is with higher wages. Higher wages always lead to inflation. That is the number one thing. And you offset that in previous years, at least during Obama, with massive immigration, and that to help keep wages lower. But if that's not successful because of the disruptions, then you see wages climb and inflation. And when inflation goes, so will commodities, and that will affect both gold, Bitcoin as well. In fact, we can take a look. Bitcoin should be, it's on the rise from this recognition that, you have a value of a dollar that's going to be continuing to decline, at least from a purchasing power standpoint. And so people who are looking to hedge that are either going to move into other currencies. So you have to find places that don't have those constraints. So they've been moving money into the euro, of course, crypto, and of course, gold is also going to be the secondary one. And you can see from a euro standpoint, they recognize this early on. It's been something that's been going on when we thought that there might be some constraint. Euro faded, and now has returned completely back to the upside. Of course, a couple of positive extremes right in here, and just to build the positive extreme, nothing too dramatic. From an NQ standpoint, you can see the Nasdaq's a bit weaker. Inflation and those kind of constraints could impact tech a lot more, and so the Nasdaq's always more volatile, so it's just one of those things. Of course, looking at it with the pink bar setup, pretty clean from its action. We've got the new adjustment into our pink bars. You'll see it in this light green or chartreuse color that they call it. Eventually it'll just become a white MBI line as soon as all the buy configurations are complete. You'll probably just have a MBI white 1, 2, 3 concept, but it'll mostly be the white and the yellow. For now, just from a segregation standpoint, so that I can at least identify which ones have the highest yield potentials, at least regularly. We know typically with the white MBIs, we usually look for, at least on the S&P, at least 5 points. I haven't done the testing for the NASDAQ. That'll be coming up. This is the 2A program, just so you're aware of it on there. So we had Thursday ending with the short signal configuration, dipped down. MBI came in and started off okay, and we rolled over pretty quickly. And when we roll over, I usually look for where the magenta and yellow move directly, and you'll see I have these little numbers. That's actually just the pivot point of the green at this particular stage. So 2953 matches that little white number up there, and that's just to let you know where that pivot is, because we find that the ones that happen above the 25 line versus those that happen below, we have slightly different viewpoints of their strength, and particularly when they end up pivoting lower in the under 19 range above the 10 here, you tend to get more weakness or consolidation. And it just is a function of the maths, the way the algorithms are working in there. So early on from buy configurations came across, it was pretty decent. Now what you're going to notice on our MBI indicator here is you see this blue line has turned magenta. The interesting thing about this is I created an additional line, and the easy way to get to it is just to edit your MBI indicator and the inputs. You'll find this blue X, and if you click 1 to it, it will turn it on. The original lines are right here, and now they're defaulted to 0, just so that you have the basic one. These can all be turned to 0, or any ones you don't want to see can be turned to 0. But all this does is it produces a gray line, and you'll see it in just a second. So here it is. So what it is it's an adaptive average of the blue line, and it's really meant, from my standpoint, it was much more difficult to find continuous slope angles and that from even linear regression that maintain, because we do get some volatility in the lines, and this just became an easy crossover segment. So when we get the crossover along with our magenta underneath, it triggers. There's also an input value in the MBI indicator down below. We can go back to that one, you can see the next one. And it will trigger, I don't know that I have it on here at this particular point. But what it does is it's an input for how many bars it will wait to signal a change when we're above 15, and that's all it is. So in this one particularly I use, if the MBI, the shakeout magenta is over 15, it holds off on triggering a signal for, I believe the input originally I have was 7 bars, but it can be then adjusted for testing purposes and when I evaluate which one is the most ideal, because for now I don't want it to present any shorts when we're in these long runs to the upside, just from a convenience standpoint. But what you will notice with this is that as it comes down, when it ends, you are in that point where you got to start thinking about, okay, cover points, particularly effective below the 23% at bringing the lows of particular moves. So right here triggered it again, and then it ended literally right here. And that was the bottom of that bar. And then you can see the blue crossing over along with the magenta. That's a secondary turnaround buy after a sell. In this particular case, this sell, unrelated to the pink dot here, is just about a stop configuration that I pre-put in there when working it, so that at least at a minimum you have something that exits. But what you'll find on the latest iteration is these pink dots, which really represent that crossover with this point as a cell configuration. It wasn't converting the colors properly, and so I couldn't get it out just yet with the indicators. I did some more work on it, much closer with it now. And I just had to create the dotted trend lines, and for anyone interested, I can always put on a Skype chat how you can make any of our configurations give you a trend line like this. This just makes it easy to identify quickly in the charts when I'm scrolling through, so I can make sure that the data is good with it. Here you see we ended up with the kind of flat range after the nice little pop from the NBI that took place over here, and that buy ran all the way through in a beautiful run all the way into this post-market until just now. So that was pretty decent, and that came in at the 73 level. For whatever reason, during my adjustments with the NBI, this is a C version of the program, if I can get it to click. Let me see. Only because when changing the code, I want to have the original so that we have the one that everyone's working on at this particular point. But you can see we've got the pink dots. They won't be pink, they'll just end up turning red, so you won't notice the difference when it happens, but at least it's identifying it correctly and would transition it. That's for some reason not giving me my green dot. Fortunately, I put in enough of the different buy configurations that even in a miss like that, where clearly with the crossover and everything above, it met all the criteria that we needed for a turnaround buy, even if it was a little bit further over. So I have to find out what's blocking that in the code. And sometimes it's just a single line, a single calculation can affect it, but overall, this is going to be very strong. The ones that I haven't done with this are the pivots, which I'm working on, where we have a strong pivot like this up at the higher levels. This was a 40 pivot on the green, but where both magenta and yellow are dipped below, but sometimes the magenta will be above. So it kind of throws that off a little bit, but it meets the criteria for everything you would expect, because you're getting the orange spike, you get the steel dipping below, and DOC spread, all the things we like. So that will just move the configurations a little bit tighter and get us closer and closer to almost precise. But at least from a visual standpoint, you can get an idea of how that's incorporated. And as soon as I've got figured out where some of that difficulty is, then I will send out this version, and you will have that adjustment, which I think will be an even better enhancement to being able to exit properly. I did mention, though, that just from a reference standpoint, typically when we get these buy signals, I'm looking for typically right around 5-point move is sort of the middle, kind of the bottom range that I look for, and then it can range anywhere from 8 to 15 plus points, as you've seen in some of these rallies. For instance, even from this green one at 73, bouncing all the way back up to the 80 levels, and so this chart's not updating for some reason. It's kind of frozen, so I have to copy a new one. But if we look at the current model right there, it's at 84. But it went right up to the previous algo we had up at 92. All good stuff from that standpoint, but just incredibly accurate as far as getting tighter and tighter with where things are, just getting the pink bars to cooperate with what we can see from a reading standpoint, and incorporating it to both shake out and when we see positive extremes and expecting retraces. Because a lot of times what you'll see, these dark reds appear after you've had some positive extremes, and it just basically kind of fills and maybe goes across a couple of bars and then starts back up again. And that you can see where transitions there, ends here, and then sure enough, we turn around with the pop. The same thing happened here. You see dark magentas right there. It actually, first one popped in right there. It won't be that way when it's rising. but it ended right here, which was right down at the bottom of that. It went down another bar. So from my standpoint, it's just one of those where, hey, I know to tighten my stops quite a bit and look for that turnaround play. Because it's not always enough to have just the magenta cross above, and you could wait for just the blue pivots, but having that secondary visual at this particular point, when it's incorporated into all the programming, it's not going to be necessary for you to see it, but I just wanted you to know that it exists and what the purpose of it is, because it really gives us a clear delineation of solid downtrends when it's moving in a singular way. But even if there's little pivots up, on a normal regression, that would throw it off completely. And this usually maintains it a little bit cleaner. So, as always, I will update you with whatever new developments come of these, and as soon as those adjustments to the code are made, I'll get them out, because it just gets us cleaner and tighter every step of the way. It's starting to really match beautifully to the market moves. Trade well. We'll talk again later. I'll be on the Skype chat.